Before we jump in, I do earn a referral fee when you use the services and companies I demonstrate in the video, but there is no additional cost to you. I chose them because they're the best in the industry and you're safe with them. Did you know that most LLC owners overlook the importance of setting up an owner's draw, which can significantly affect their taxes and cash flow? In this video, you'll learn how to set up an owner's draw for your LLC quickly and easily, ensuring you're maximizing your profits while staying compliant. Many LLC owners struggle with understanding how to pay themselves from their business profits, leading to confusion and potential financial pitfalls. We'll explore the steps to correctly set up an owner's draw, including the differences between draws and salaries, necessary documentation, and tax implications. The key insight here is understanding that an owner's draw is not considered a business expense, and knowing this can change how you manage your finances. Before continuing the video, let's introduce you to Busy. Busy is a professional formation service company to file your LLC. It's an amazing company that will guide you through creating your LLC. They even have a service where they will file your LLC for you without you going through any hassle. The full review of Busy is also given in the description box down below. The first thing you need to know about paying yourself as an LLC owner is that you have the option to pay yourself through what is called an owner's draw. Keep that phrase in mind, owner's draw. Owner draws, also commonly referred to as owner's distributions, are when you, as the business owner, withdraw money from the business and transfer it to your personal account for personal use. As a business owner, your goal should always be to keep your personal and business finances completely separate. Otherwise, you risk commingling funds, which could lead to legal trouble with the government, a situation you definitely want to avoid. Owner's draws are designed to prevent this from happening. Think of an owner's draw as money being taken out of your LLC's bank account and moved to your personal account for personal expenses. You might be wondering, how exactly do I set up an owner's draw? Don't worry, I've got your back. Here are the steps. Step 1. Get an EIN. Make sure you have your employer identification number, EIN. An EIN is a 9-digit number assigned by the IRS to track your business for tax purposes. You can apply for an EIN directly on the IRS website. The IRS requires you to provide some basic information about your business during the application. Once you receive your EIN, you can move on to the next step. Step 2. Set up your business bank account. If you don't already have a business bank account for your LLC, you'll need to set one up. Most banks offer business banking options. Use your EIN to open the account, which links it to your business instead of your personal social security number. Once set up, you can deposit your business's earnings and manage its funds through this account. Step 3. Make your owner's draw. After your business starts earning enough money, you can begin paying yourself. To do this, transfer money from your business bank account to your personal account via check, bank transfer, or cash. I recommend using checks or transfers for a clear paper trail. Record each draw's date, amount, and purpose for bookkeeping. Once the money is in your personal account, you're free to use it for personal purposes. Keep in mind, however, that LLC owners typically use owner's draws instead of paying themselves a set salary. You have the flexibility to decide how much and how often to pay yourself, allowing you to leave more money in the business when needed. Word of caution: don't withdraw too much money too soon. Always ensure your business has enough funds to cover expenses, including taxes. If you're new to self-employment, remember that you'll owe a 15.3% self-employment tax on top of regular income taxes. This tax covers Social Security, 12.4%, and Medicare, 2.9%. Here's a case study. Let's say you made $130,000 as a new LLC owner, incurred $70,000 in expenses, including taxes, and paid yourself $60,000. You'd leave no room for unexpected expenses, which could lead to financial trouble. Always keep a buffer for emergencies or additional business costs. Other tax information for LLC owners. Information for LLC owners that is important to know. Now that you know exactly how to pay yourself as an LLC with your owner draws, I want to talk about some of the tax information you need to know regarding the money your business earns and that you pay yourself. For tax purposes, LLCs are considered pass-through entities. This means business profits, losses, and tax obligations pass through the business entity to the owner. One great advantage of this corporate structure is that LLC owners do not have to deal with double taxation. Double taxation occurs when a business entity is taxed at the corporate level, and then the owner also has to pay taxes on the profits they make from the business. Some business entities, such as C corporations, face double taxation. However, as an LLC owner, the IRS only taxes your business profits once. Keep in mind that you will owe income taxes on your LLC profits regardless of whether you leave the money in your business bank account or transfer it to yourself personally. The IRS will come for its cut of your business's profits no matter where you store them, personal or business account. Uncle Sam always gets his cut. Limited liability in LLCs. If you're new to LLCs, I want to quickly remind you that LLCs offer limited liability protection. This is one of the main benefits and probably one of the primary reasons many LLC owners set up LLCs in the first place. Liability protection means that you, as a business owner, will have limited liability in the event your business is sued or has debts called in. They would not be able to come after your personal assets, like your personal bank accounts or home, depending on how your LLC has been structured and how you have maintained your corporate veil. The combination of liability protection and pass-through taxation is what makes LLCs such an amazing entity type. Tens of millions of Americans choose the LLC over other business types when first getting started. However, down the line, many LLC owners switch to the S corporation to mitigate their self-employment tax obligations. As your business becomes more profitable, self-employment taxes can become a larger burden. Now, I'm going to show you how to start an LLC using Busy, and in the description down below you also find a review of their service. They are one of the best entity formation platforms in the market that charges $0 for their service. Now, let me just show you what types of services Busy provides to business owners. After arriving on their website, you will see the list of all the services they provide. Under the Start Your Business section, you will see 4 of their key services, which are form an LLC, C corporation, S corporation, and nonprofit. As you can see, there are 3 different packages: Silver, Gold, and Platinum. And the first thing that's worth mentioning is that the state fee does not change. You can see it's $236 in all the packages. Some of the extra services that are included in this package are preparing and filing the articles of organization, unlimited name searches, free registered agent for 1 year, and unlimited phone and email support. Next, the Gold package, which costs $249. And this is the package I highly recommend, with filing EIN, which is a business tax number, Form 2553. It also comes with operating agreement, business bank account, lifetime company alerts, tax consultation, etc. In the next section, Busy is asking you to provide your LLC name and its designation. After that, they ask you whether you want to get a registered agent through them or not. Getting a registered agent is a legal requirement in order to file an LLC in any state. Busy is providing registered agent service free for 1 year. And after that, it's $119 per year. Busy is asking you whether you want to get an EIN or not. Then if you want to get a free tax strategy or consultation call with them. In the Busy dashboard, if you go to Legal and then Licenses and Permits, they can do this research for you and make sure that you have all the proper licenses and permits. After providing all the information, Busy will be the one handling all the documents and registering your LLC on your behalf, so you won't need to go through any of these hassles. Here's a question from one of my subscribers. The question was, what percentage should I pay myself as a rule of thumb, and how often, monthly or annually? This is tricky because your profession determines how you should compensate yourself from your LLC or S corporation. Let's assume you've switched your LLC to an S corporation. The IRS requires you to give yourself a reasonable salary. A normal salary for an S corporation owner varies depending on your business type. For example, if you're an electrician or contractor, we look at your area to determine a reasonable salary for your profession relative to your business profits. If your business made $100,000 in profit, it wouldn't make sense to give yourself a $70,000 salary, even if that's the average salary for electricians. Instead, the salary must be reasonable compared to your business's net profit. When switching to an S corporation, instead of paying self-employment taxes, you pay payroll taxes. A very high salary could mean paying more into Social Security and Medicare taxes, which might not benefit you long-term from a tax savings perspective. However, it may help if you're trying to qualify for a loan and need to show more income. To ensure a reasonable salary, we perform a reasonable compensation audit. This helps determine the right salary based on your net profit and tax strategies. Thank you for watching this video. If you found it helpful, please like, comment, and subscribe. Share this video with one LLC owner who needs to know how to pay themselves. I'll see you in the next video.